Sort of smile. Hey, good afternoon, everyone. It's Hector Aguilar and Ben Pan Champagne with Aguilar Realty Group.
Hey,
We've been
everybody.
kind of MIA for 2 weeks, and I apologize for that. But I'm glad to be back. Bringing some value to my clients and to our friends and family, and to the industry as well. And today we chose a really good topic that I think is on the mind of a lot of consumers, which is what's better? Is it better to rent or is it better to own? Right now we find ourselves in a market on the rental market that's pretty extreme. I want to say right now that rental prices are increasing and have increased over the last few years. And just wanted to share a little bit of a graph with you guys. You can see here that rents have actually increased steadily since about 1988, moving forward to about 2020. And right now, honestly, when we're doing some rental contracts for some of our clients, we're seeing that a 3 bedroom, 2 bath in our communities right now, in for example like La Puente, Covina, West Covina, are in excess of $2,700 a month. Some approaching $3,000 a month. So again, the conversation is, should you be renting, or should you own? And the truth is that you're going to get a lot more value from owning and buying your own property than renting, right? Because in
Yes.
reality, when you're renting, what are we doing? We're paying the landlord's mortgage, right? You're paying a mortgage, it's just not your own, right?
Right.
So you know that there's a lot of misconceptions about reasons why people can't buy. And that's something that we'll talk about a little further down in our video today. But certainly we're in a market right now that if you're paying rents of 27, 28, $3,000 a month, you're better off buying your own house and paying your own mortgage, in my
Yeah.
opinion. So I know that Ben, you've recently helped a couple of people lease properties, right? And you're seeing rents in that range, correct?
Yes. Been wild, and even now, um, some renters are even offering above asking price of the landlord, just like a buyer is.
Oh, wow.
And
I
it's
wasn't aware of
yeah.
that. I don't do a whole lot of leases. I've done a couple over this last year, but I know Ben has been more active in the lease market. And I mean, they're even experiencing some overbidding on lease property right now. So even if they're asking $2,800 a month, they could be leasing it for $3,100 a month. So
Yeah.
that's happening also in the rental market. So one of the things that we wanted to talk about too was, maybe what are some of the reasons to buy? And I
Yeah.
wanted to share with you a graph here that I have that will help us maybe visualize, the reasons why buying is important, right?
Yes.
Obviously, buying a home means that you're going to have consistent monthly payments. You're going to have a situation where, um, pardon me, you're going to have a situation where you know how much your payment's going to be because you're already set into a specific mortgage payment, and you're going to be able to budget yourself that way. And as you can see, rents have been rising aggressively over the last decades, and you can lock in your 30-year or 15-year payment, throughout the term of the loan, and you'll know how much you're going to pay every month without having to worry about, the rent's going up every month, or is it going to go up 5%? Is it going to go up 10%? Right. The other thing
Hector,
that
can you increase that a little bit?
Sure. The other thing that's a benefit to you too is, you know, you're able to increase home ownership, right? It helps build your wealth. We can see that renters have substantially a lower net worth than homeowners. This example shows you that, the net worth is quite vast, and what contributes to the net worth, and that's going to be a combination of, I'm sorry, combination of, the market increasing over time, and so the equity goes up on the property, and also, you know um, the advent that you're paying down your mortgage, so your net worth is more. So when you owe less on the property and the property is worth more, then you have an aggregate net worth of equity building up in your own home. So again, whether you're paying rent and you're paying your landlord's mortgage, or you're better off paying your own mortgage, well, you can decide, and you can see that paying your own mortgage is a better option for you. Okay. Also, owning gives you more flexibility. You have limited options with regards to space availability. 2 bedrooms, 2 baths. You're limited as to what you can do on the property. You can't make modifications to it. You can't, you can't change the color scheme. You can't change the kitchen. I mean, you're pretty much, you know, tied into whatever condition of the property is when you're there. And of course, when you're a homeowner, you can certainly design, your own, pardon me, your own, to your own taste, whether it's paint structure, remodel bathrooms, remodel kitchens, replace windows, do the things that will appease to you in the sense of style and design, color, where renting doesn't afford that to you. So it's definitely an advantage for you to be a homeowner as well. Um, Moving forward, other reasons to buy is, stability, coming into a neighborhood that has stable communities, has, longstanding schools, maybe better services. One of the things that I wanted to discuss with you today is, what does the impact have on your net worth? And I wanted to share a really, really quick graph here that shows you clearly that being a homeowner, you have more net worth built over time than being a renter, right? Because how many of you have seen that commercial where I remember seeing a commercial years ago where someone's throwing money down a blender, right, or down a drain? And basically, as a renter, yes, you're providing a household for your family, and you're providing shelter for your family, and you're probably living close to where you live, but your net worth is not being impacted. As you can see, a homeowner's net worth is vastly, close to $250,000 more over time, if not more. So another great reason to be a homeowner versus renting. I think there's a lot of myths in the market right now as far as your requirements for down payment. Most people think that, your down payment that you need to make is going to be somewhere around 20%. And that's absolutely a myth, right? I think people also step back and say, well, I'm renting, I'm paying this much rent and it's hard to save money. And, I need 20% down to buy. And that's not the case. There's many programs out there, whether they're first-time buyer programs, maybe some city-assisted programs, maybe some down payment assistance programs that are available to buyers such as yourselves. The truth is that it looks like the average down payment for most first-time home buyers is around 7%. And in fact, there's programs like an FHA loan, you can only come in with 3.5%. If you're a veteran and have served our country or are currently serving our country and you want to buy a home, you can buy with 0% down, right? On average, repeat buyers do come in with more down payment, but that's because typically they own a home, they're selling a home, they're taking the equity and putting all that into a property. So that's why you see repeat buyers be a little bit higher. But first-time buyers, less than 7%, 3.5%, 3% down conventional, 5% down conventional is definitely available to you to be able to purchase your home with the least amount of down payment. So that's a myth that we can tackle. Another myth that's out there is, man, I have to have a FICO score of 680 or above. That's just not true. We know that through our experiences that there's lenders out there that will finance the purchase of a home, through FHA or other programs where you can have as low as 580 FICO score. Your interest rate may not be as attractive as what you're seeing on the TV or you're hearing on the radio, but you can still get into a home with as little as 580 or above. What's your target FICO score you really want to be at? Probably 620 or above to get a better pricing. But certainly, that's another myth too, is that my FICO score is too low. The truth is that when it comes to credit FICO scores, it's really different from your credit or your consumer credit, right? Your Credit Karma could say that you're at 720, but when we run a credit report for a mortgage, it might be slightly lower because they look at different factors, right? So you really won't know what you can qualify for, or if you can qualify, unless you sit with a consumer mortgage banker and do a consultation with them for free. Typically, you're going to pay for your credit report, and that's about it. But that way you at least know you have a game plan. And the truth is that we realize that it's not going to take you 30 days or 60 days to actually buy a house, decide to buy a house. It's a process. Someone doesn't wake up tomorrow and say, hey, I'm going to buy a house today. No, that doesn't happen. Right? And then it takes us anywhere between 30, 60, 90 days, sometimes 6 months, even 12 months out. But at least you have a game plan. When you sit with the mortgage bank, they're going to tell you what your FICO score is, right, Ben? They're going to tell you how much money you're going to need for down payment. They're going to discover based on your income how much you can qualify for. And speaking of income, the truth is that people think that the income is going to be required is going to be like tons. Right now, the average percentage of income for a mortgage rate is about 17 to 18%. So it's still affordable, right? I mean, like I said, if you're going to be paying a mortgage of $3,000 a month, and you can afford that, why not discover if you can buy a property, right, Ben?
Exactly. Yeah. So
right now,
don't waste your money. Don't waste your money away. Make it to good use, like for your own good use for many
For sure. I
years.
mean, buying a house is the most important, if not the largest financial decision you're going to make in your life. But there's so many benefits to it. Your net worth is going to increase. You're going to, pride of home ownership. You're going to live in a great community with great schools. You're going to be able to design the property in your own way that you want, and certainly have a little bit more freedom and more direction, or at least being more in control of your financial freedom moving forward.
Right, right.
One of the
We have
questions that we have right now too is, what's the condition of the market, right? Like, what's the condition of the market, Hector? Well, the truth is, right now we're in a huge seller's market, right?
yeah,
And the reason we're in that seller's market is because we can see here by this graph is that the inventory is really low right now. The average days on market for a property in our community is about 18 days. 18
yeah,
days. And the properties are selling in 2 weeks or less, often with
right.
multiple offers. So I
Hmm.
get it. There's competition, but hey, you know what? We're starting to see some softening in the market too. We were seeing during the summer, April, May, June, we were seeing properties selling like in 3 or 4 or 5 days with like 20, 30 offers. That's not the
Yeah,
case anymore, right?
yeah,
We're starting to see that homes are selling in a couple weeks now, 10 to 17 days on average. We're starting
yeah,
to see that on my listings. I'm averaging about 8 to 10 offers versus 3 months ago I was averaging 15 to 20 offers. So there is opportunity out there. Don't be discouraged,
yes,
even though it's a seller's market and we know that homes are selling rather quickly. There's still opportunity. Don't be discouraged by that. Right now
right,
interest rates are hovering under 3%. I mean, historic lows that you're probably not going to see. And just 2 weeks ago, the Fed funds came out. The Federal Reserve came out and said that they're going to be increasing the Fed funds rate um, to at least 4 or 5%. Now, keep in mind, the Fed funds rate has nothing to do with mortgages, but typically mortgage will follow that suit, right? Fed funds
right,
rate means that those are the rates that they're lending banks and financial institutions to cover their requirements. But still, that affects consumers, and typically mortgages will follow. So even though you're paying a home, let's say 600,000 at 3%, and you pay a home that's, let's say, 500,000, you're thinking, oh, I'm going to pay less for it. But if you're paying a
no,
4% interest rate, guess what? The cost of money over time is
this,
way higher. You're going to pay more
right,
interest on the property that's 500,000 than if it's at 600,000. So
right,
again, don't be discouraged. I think right now is an amazing time to purchase a home. I think it's these are some of the myths that some renters have in their mindset, like, hey, maybe my rent's going to be cheaper than buying. Well, right now we're seeing that may not be the case. You know, if you're thinking about buying a home and you're in the market and you just don't know where you're at, reach out to myself. I'll have Ben and Julio, and I'll put you together with some of our preferred lender partners to kind
yeah,
of review your income, your credit, where you're at, and give you a path, right? Give you a plan that maybe you may not be ready today to buy, right? But hey, maybe you can get ready in the next couple 3 months, and guess what? You can, get into a new home in November, December, and maybe be in your new home by the beginning of 2022. So
yes.
I just wanted to, Ben and I always think of great topics to bring to our consumers, and also to put out to our partners. And I think that this one hit the nose right on the head, right? Renting versus owning, the pros and cons. So, if you're thinking about
Hector, we
buying,
have we have
let me
one
know.
comment. We
What's
have
the
one
comment, Ben?
comment from Miss Ellie in. I don't know what
Oh,
this
Miss
means.
LN. Oh, they said something
Paper
about
noise.
paper noise. I guess someone's rattling papers and stuff. I apologize for
Uh,
that. But in any event, just again, we're trying to bring valuable information to you as a consumer. Want to make sure that if there's any questions that you have about buying and you want to kind of have a plan, and you kind of want to understand, where's my credit score at? How much income am I going to need? How much down payment should I be saving for? Now's the time to plan. Give us a call. My agent, my friend here, and I are ready to work. Got a couple other buyers agents that are ready to assist you as well. We look forward to hearing from you. Give us a call. You can reach us at 626-255-2783, or you can also reach us on our social media at Aguilar Realty Group. Thank you, Miss L. I appreciate the comment for the great
thank
info.
you.
Looking to bring you more. And reach out to us. We'd love to kind of connect with you and help you out. Once again, I'm Hector Aguilar of the Aguilar Realty Group. We're trying to bring more and more value to you every single week, and improve the quality of our videos. And it's a learning curve, but I appreciate you guys sticking with us, and hopefully we'll be able to help you here in the future. Ben, thanks again always for bringing some great topics to mind, and putting this together. So have a good day, everyone. Enjoy your day, and we'll see you next week. Take care.
Hi, everyone. Thank you.